Remember, I mentioned these services are all about experience. When you experience this, you want to have fun, you want to know that you are safe, you want to know that it's convenient, and the level of risk that you perceive in here is low. That makes you feel comfortable and trust the service. Because if you look at another element of this, is it's about trust. How do you trust a service and a capability? It is about knowing that the perceived risk is low and that the safety that is built into these services are high, so that it gives you a level of comfort to want to use the services without feeling fear.
Buongiorno a tutti, I'm Paolo Sironi, your host of The Banker's Bookshelf. The Banker's Bookshelf is a show where I invite authors and researchers of the most interesting papers about banking present, its fintech future, and everything happens around them in digital economies. In today's episode, I invited Kevin Govender. Kevin is the author of The Rise of the Sharing Economy, which is a guide to understand how access is becoming the new ownership. For those of you watching our show on YouTube, you can see the book here, the book cover. Now, the Time magazine dubbed the sharing economy one of the 10 ideas that will change the world. Back then, it was a new economic model that promised to focus on access of assets and resources instead of ownership. And now it's a multi-billion-dollar economy. The services have exploded in popularity across many industries, and there are also examples in financial services. Now, Kevin, welcome to the show.
Thank you, and it's great to see you again, Paolo.
Kevin, you're connected from South Africa.
Yes.
Now, tell us a bit more about what inspired you to write the book and why people should read it.
Okay. So I did my master's through Wits Business School, and I did it on the sharing economy. It was a pure dissertation, and this was, it was new research. It was the first time detailed research of this magnitude was being done in South Africa. And when I completed it, I was actually given the Golden Key Award for groundbreaking research. And some of the feedback that I got from the professors was, it would be great to actually share this knowledge. I think it's valuable knowledge. So maybe you want to consider some way. And I thought about it, do I do a PhD or do I do a book? And my decision was to do a book. So I wrote the book. And
So
why should
that's a
people
way of sharing back the knowledge to people.
sharing back the knowledge? Exactly. So if you look at it, the book is an important resource for entrepreneurs, for business, for consumers, for academic, for marketing managers, for students, and anybody who has an interest in innovation, consumer behavior, micro entrepreneurship or entrepreneurship, and also alternative business models. And what I mean by that is, this book gives you the ability to be able to understand how consumers make decisions, the behavioral model. So I created a model to be able to identify what are the key dimensions or criteria people use when they make a decision to either buy something to own it or whether they want to share. That's the one component. The second thing that's important in the book is I talk about micro entrepreneurship. And if you look at the definition of entrepreneurship, it's about people that want to go into business. But as you know, with business, you need capital to start business. With micro entrepreneurship, you already own the asset. It's assets that you own that are underutilized. So how do you take underutilized assets that you currently own and monetize it? So that was, and that's the option. If you look at the Airbnb or Uber, that's where they've got. And I think the third most important one is about business models and alternative business models. We always have this view that you can only compete or collaborate. You can't do both. My view is different. If you look at it, you can compete and you can collaborate. All you need to do is define the rules of engagement when it makes sense to compete and when it makes sense to collaborate. And I'm happy to share some examples a little bit later on organizations that have gone that role. And if you look at the world, where the world is going, a lot of people where if you come from a background where you've never owned before especially in South Africa where there's such high poverty, unemployment. The whole idea of owning something is very, very important. But a lot of people cannot do this. So access economy now makes it possible for people who couldn't experience something to now have the ability to do that.
So, Kevin, thanks a lot for writing this book. What I find interesting is that there is a theoretical background, which is important as you explain the pros and the cons, the key drivers. So anybody who wants to imagine their opportunity to create a solution that is centered on the access economy can find a guide to shape their mindset and to test their ideas. But then there's also plenty of examples, and I was very entertained in going through all of those that you are highlighting in the book. Now, we can do a little bit of both during this podcast. Let's start from the theory. So we set the frame, and then let's dive into some examples also related to financial services. So first of all, when you open the book, you find this small conceptualization about the burden of ownership and key consumer drivers. I think you highlight the economic need, technology opportunities, social and environmental challenges. Can you explain this?
Yes. So when you own something, there's a theory of ownership. It's an entity that you own, and with that comes what we call the burdens of ownership. If you own a car, for example, you need to maintain the car. You need to pay maintenance. You need to pay insurance. You probably need to park the car in a safe place so that you can actually safeguard it and also maintain it from the environmental conditions. But when it gets to excess, you don't need all these things. It's the owner that needs to worry about this. So the burdens of ownership are gone. So that's the one component. If you look at it, also when I looked at the model, I built a model. I used 23 by 23 dimensions, and I looked at which of these dimensions are most important, and it broke into four areas. The monetary component is what do I pay for these services. There was a social component. The social component was about what what can you get for this? Example, meeting new friends, getting to know new people. There's a risk factor in terms of this, and I think the risk factor also talks about uh, what are the risks associated with getting ownership kind of capabilities. So those are the kind of things that are important when somebody makes a decision. Which is more important? Am I willing to pay more, for example, for convenience, um, to know that I have the ability to do what I need to do with the limited time I have? I have that, but also it's all about having a different experience. If you look at Airbnb, it's about if you own a beach house, you have to go to the same place all the time. But with the sharing economy, you have the flexibility to go to different places, different countries, and experiences. So that is some of the opportunities that one has.
Okay, so we're saying a lot of things. So, Kevin, let's make a little step back so we take the audience step by step into the story. Now, when we talk about the key consumer drivers, we have economic drivers, we have technology drivers, we have
Yeah.
social drivers, and we have environmental drivers. So there is a portfolio of things that push people into the sharing economy. First of all, why economic drivers? I presume it's the fact that sometimes life is expensive. We can't afford to own. So now we have a chance. And let's discuss the others.
Yeah. So if you look at I'm going to use the book as well. If you look at the economic drivers, there's three of them. One is what we call the total cost of service. So how much does it cost? And the good thing is, when you buy a service, you want to know the total cost upfront. You don't want surprises later. And that's what the sharing economy, it tells you what the total cost of the service is. That's the one component. The second one is what we call predictability of cost. Now, predictability of cost is basically saying the ability to understand what this cost is going to be. Again, not getting any surprises later. And the third one is what we call absence of cost. So part of that is where consumers feel that there's no cost incurred. Some services, for example, if you look at Spotify, there's different subscription modules. There is the first tier, which is free. There's no cost associated with the service, but you get very basic and very limited services. And if you feel these services are inadequate for you and you'd like to get more additional value and additional capabilities, then you buy up, you start paying. So those are the kind of things, those are the three elements from a monetary perspective that are done.
What about functional perspectives?
Functional has quite a bit. If you look at functional capabilities, so for example, transactional effort. What is the effort to actually be able to use these services? We talk about pre and post usage. For example, when you use these services, what is the upfront activities and the post activities that needs to be done? For example, if you take a Uber picks you up at the place you want to be picked up and it drops you off. There's nothing else you need to do. So those are that. For example, maintenance effort. What is the maintenance effort with using these services? Also, storage. For example, if you hire a car from the traditional hire companies, you have to find a place to park this car. You need to incur cost to park the car. But with Uber, it picks you up where you want to be picked up. It drops you off where you want to be dropped off. You don't have to worry about storing the car. You don't have to worry about parking cost or anything associated with that. And then the other things is, for example, you get things like use limitations. What are those things you're allowed to do with that service or the product that you do, and what you're not allowed to do? And also, you get the risk of failure and risk of non-availability. Now we know, certain sharing economy services are not available in all countries. Some countries have a problem with the governance or the legislation and regulation around these services. So some countries have barred them. But however, you find that these sharing economy services are available in most countries and provides a huge convenience for consumers around the world.
So far we said that there are four customer drivers. The fact that economically speaking, we may not have enough money to own, so there is a push around the sharing economy, the technology that is now available, social opportunities that allow us basically to bring assets into the middle and share them, as well as environmental concerns. So some of us are very inclined to share, for example, the car, to drive it instead of own it in a way that to reduce somehow the impact of production and usage. Now, but then you identified across these 23 perceptions, consumer perceptions. And whenever you discuss a case study, I see that you say, okay, when this one plays pro or plays against them. So we just said monetary perceptions are important and it's very practical perception. So it's about effectively the cost of owning and maintaining. Then you mentioned about the functional perceptions, which are still, if you like, very practical, like the limitation of usage or the flexibility or inflexibility for that. Then you identify, and let's continue, two other sets of perceptions, which are experiential and symbolic. So a little bit more, I feel like, abstract compared to the previous two, monetary and function, which are tangible. So what's an experiential perception?
So, for example, convenience is an experiential one. Safety is very important, especially in a country where there's huge safety risk or concerns of using these services. We also talk about perceived risk. What is the perceived risk in using these services, as well as environmentally friendliness, need for careful handling, as well as fun while using. Those are some of the experiential, because remember I mentioned these services are all about experience. When you experience this, you want to have fun, you want to know that you are safe, you want to know that it's convenient, and the level of risk that you perceive in here is low, that makes you feel comfortable and trust the service. Because if you look at another element of this, is it's about trust. How do you trust a service and a capability? It is about knowing that the perceived risk is low and that the safety that is built into these services are high, so that it gives you a level of comfort to want to use the services without feeling fear.
Okay. And what about the symbolic perceptions?
The symbolic ones were three. One is about personal attachment. So when if you look at ownership, you attach to it. There's the personal attachment to these products and services, impressing others, and curiosity. Now, impressing others, if you think about it, if you own a car, you're always rocking up with the same car. But if you are using some of these car services like Uber, you're always coming up with, and there's various options. You can do the black Uber. That's the highest level where you get these huge, beautiful cars chauffeur driven to you. Curiosity is another important one. I think with the fact is that there's all these different services available out there. Um, and sometimes people are curious about these services, so their curiosity leads them to want to experience this. Uh, I'll give you an example. During COVID, Airbnb, as we know, we were all in quarantine, so services like Uber and Airbnb were stopped. People couldn't travel, people couldn't move around, so you couldn't use it. But what Airbnb, they came up with a curious, a new added value service. They were able to give you an experience while you couldn't travel from the comfort of your home. For example, if you always want to go to Switzerland to experience the chocolate and the great country, they created an experience of how chocolate is created in Switzerland. So you can immerse yourself in this capability and from the comfort of your house, do this. So you were curious about it, and now you're experiencing it. So those are the kind of innovative and creative capabilities that was enhanced through these services during different times to cater for the different situation and circumstances that we experienced.
Interesting. So, across the book, you use these four sets of 23 perceptions to dissect across industries whether the sharing economy models made sense or not, the plus or the minus. For example, everybody can imagine taking an Uber or car sharing. You have the monetary piece because it's more convenient than buying the car itself. You have the functional piece, which is maybe the flexibility to get the car in front of your door house the moment you need it. An experiential experience, you've got to trust. If you don't trust, of course, you will not be able to engage into the journey. So there's methods inside the app to make sure that you feel protected. And it's also symbolic somehow because maybe you like the idea that you don't own, but basically you are part of a community. Some of them use it as community sharing. But there's across the many industries that you investigate one, which is particularly dear to me, and that always piqued my curiosity, which is the book sharing. As we are on the banker's bookshelf, I am inviting you to explain a little bit about what it is that can make book sharing work or not in the sharing economy.
Yeah, no, I think that's an important one, right, for book sharing. Because if you look at book sharing, just to give you an example, when I was studying, doing my master's, I needed access to a lot of research. Now, one way to do that is you need to buy books. You look at peer research that was done previously, but some of these are not free. Some of them you got to pay for. Now, to buy them could be anything between $10 and $30 to buy this, and all you're doing is you're using it, and you're never going to use it again. So what I found is periodicals where you could share. So you could go in, you could actually get access to these periodicals for, like, you could choose 1 hour, 3 hours, 5 hours, and depending on the number of hours you required, you paid a different premium. So I normally chose the 3 hour option, where I think it was about $3. And then you got to read very, very fast, right? You get access to this document. You can't download it. You can't copy it. It's prohibited. But however, you have access to read for 3 hours. And I found that was one way of, it was convenient in the sense I had access. Secondly, from a cost perspective, it was the price was suitable to get it. And I also had the flexibility to choose how many hours I required and how long I needed these documents for. So that was some of the stuff that I
That's
had.
interesting. And what about financial services, banking, or insurance? Are there examples in this space?
Yes, there is. There was two specifically that I looked at from a South Africa perspective. One was Lendico and Rainfin. Now, what this is, how this work is, it is, for example, a lot of people in Africa or South Africa do not have access, they don't have collateral. Now, as you know, if you are starting a business or you need access to loans, you need collateral. You need something that reduces the risk of you borrowing this money. And in the event that you're unable to pay, the bank is able to repossess some of your assets to be able to cover that. Now, considering a lot of people work in the call it the market that they do their own work and generate very little income. They don't have this. So, for example, Barclays, that was a bank in South Africa that acquired Absa, they needed to do work in Africa. And in Africa, very similar challenges. So, what they did is they acquired a company called Bankfin. And Rainfin. They acquired a company called Rainfin. And why they acquired this company had an algorithm. It actually matched two types of people. One is people who had great ideas, and second was the lender, who's the person who is interested in these great ideas, willing to take an equity stake in this or buy into the company. So you get the lender and the borrower. There's an algorithm that matches it. So, for example, if I, as an individual, created a capability that you liked, it'll automatically match us up in the using the algorithm, and then you and I will get together and we'll have a conversation regarding what I'm looking to do and the funding that I require as the borrower. And this lender will say, okay, great, we'll come to an agreement of, give me a 20% stake in your business, or I'll invest so much, and something of that nature. And that's how they were able to penetrate the market in Africa by doing this. So it was, as I said, Rainfin acquired by this organization using this algorithm to do that.
I find that very interesting. And I believe that anybody who wants to imagine a business opportunity that intersects the sharing economy must read this book, The Rise of the Sharing Economy, because it's a way to validate the idea that you're creating, and also is a way to be inspired to enrich that idea and hopefully be successful in creating a platform across the digital and the real life of consumers that strike that goal of making the sharing economy the centerpiece of a new way of moving around in society. Now, this is the new book of Kevin Govender that you can find on Amazon, and you can Google.
Yes, the book is available on Amazon. It's actually available on quite a few platforms in South Africa, bookshops as well, in exclusive books. Take a lot in various platforms, but for global, definitely Amazon, it's available.
So if you live in Paris, go on Amazon. If you live in Johannesburg, walk out, go to your nearest bookshop. I'm sure you can find it and buy your paper copy. And it really provides this framework to imagine how the sharing economy is transforming the way we do business and consume assets. I invite everyone to stay tuned for more conversations with book authors and researchers that are shaping the future of financial services and beyond. Don't forget to subscribe to the Banker's Bookshelf. We stream on your preferred streaming platform. We are on Spotify, on Apple Podcast, on Amazon and YouTube. Thank you very much for having attended this conversation, Kevin. That was a very interesting chat, and arrivederci a tutti. Listen to the jingle.